So yes, good afternoon guys, and this is what is the agenda on the screen. This one is what we've already covered. Of course, we've also covered set off and carry forward of losses. So these are the things that we've done. Rates of tax have happened parallelly, but some of it is pending, so we'll see today some rates of tax as well. So that's the agenda. We are looking to complete as much of this agenda as possible in today's session. Any other doubts, etc., always welcome, guys. Very important, because deduction is always found in the exam. Salary may or may not be there, but TDS deductions are always found in the exam. Alright, so third last day, guys. Today, tomorrow and day after tomorrow is the last session. So we have 3 days to wrap this up and end DT as well. Alright. So till now, guys, I'm just telling you the trajectory. In the exam, they will give you the legal status, and more or less it will be an individual. You will have to find out the residential status, keep the exempt income out, and divide all other incomes into 5 different rooms. One of them, the first one, is salary, which we will do today, or it could be house property, it could be PGBP, it could be capital gain, it could be IFOS. In each of these rooms, you will have incomes and you will have deductions. So please remember, each room when you enter, first open the room only if required. Once you enter the room, please make sure you take the incomes and also you minus the deductions, because without that you cannot do these chapters. So each head of income has incomes less deductions. Then when you total all of these, it could be an income or it could be loss, whatever it is, you will total it up and you will go to a chapter called clubbing of income. Clubbing is basically adding other people's income. It could be anyone, specifically it could be a spouse, son's wife, minor children and HUF, their income, it could be clubbed in yours. After clubbing, you will do set off and carry forward of losses. Any losses which you can set off, you will set off immediately. And if you can't set it off, then you will carry it forward and set it off in the subsequent years. And then comes your gross total income. Guys, gross total income by far is the most useless number, because nothing happens in this number, as you already know. But from gross total income, the government gives you deductions, which is our agenda for today's session. This is deductions, but this is deductions under chapter 6A. We will do this part. And then we will look at salaries, because salaries honestly is not the most important thing. So we will go backward and forward then. So right now we are going to deductions and then we'll go back to salaries as well. Alright. So here we are. There is a chapter called deductions, but we will call it deductions under chapter 6A. I'm writing under chapter like this, under chapter 6A. And these, how will they ask a question on this, guys? They will not ask a direct and a single question on this. Every time they say compute the total income, you know, guys, after gross total income and before total income, there is deduction. So in at least 2 or 3 sums in the exam, you'll have to calculate deductions. So the section of deductions is only one section. Very happy, guys, only and only one section. The section is section 80, and of course there are different sections in this: 80A, 80B, 80C, 80B is not there, 80C, 80D, etc. Each section has a shortcut, which if you know, great. If you don't know, you will know it soon. So this is the main section for deductions. Our section is important very much, guys. This is one place where the sections are very, very important. You got to quote them. You get a lot of marks for quoting the right sections in this case. So focus your energies and by heart also the sections and the concepts with me right here in this class. Again, the agenda is the same. We will first finish all the concepts nicely. We'll wrap up the concepts, then we will go to questions, including exam questions. Just a second, guys. Perfect. So here we go. Guys, let's take an example that your gross total income is 13 lakh rupees. That means after going to all the 5 heads, after doing clubbing, after doing setup, you have 13 lakh rupees. But in this case, you have certain incomes which the government wants to tax at specific rates. Example, let's say in this income, you have a casual income which is 1 lakh rupees. You know this casual income, guys, the government doesn't let you do anything. You cannot minus any deductions. You cannot minus any expenses. You cannot set off any losses. So this one the government wants to tax at 30%. Nothing doing, yes, nothing doing. So they say that this 1 lakh is unavailable for any deduction. So I'm keeping this 1 lakh away. This is unavailable for any deduction. Plus you also have some capital gains in this 13 lakhs. Yes. Let's say you have, we'll keep numbers constant, 1 lakh and then 90,000. This is long-term capital gain which is supposed to be taxed at 20%. There is a section for this, guys, called 112. We did not discuss the section in capital gain, but I'll tell you the section called 112 which tells you that this will be taxed at 20%. Again, the government says we want 20% on this, nothing less, nothing more. So this one is also unavailable for any deduction. Next, you also have some listed EUU where 80,000 rupees is going to be taxed at 15%. That also is unavailable. And let's say you have 1,70,000 of long-term capital gain. Out of that 70,000 or that long-term, let's say you have long-term capital gain, that long-term capital gain 70,000. These 4 incomes, if you want to know the section, this is section 112 and this is section 111A and 112A. These were in capital gain which we saw yesterday, and this was general casual income, guys, is always taxed at 30%. So these incomes, the government says, listen, they are not available for any deductions under chapter 6A. So 1,90,000 plus 80 plus 70, that is 3,40,000. So I'm just going to change this to 13,40,000. Out of 13,40,000, 3,40,000 is unavailable. So how much is available? We have the remaining 10 lakhs which is available. So the government says, listen, do you want to take deductions under chapter 6A? We are ready to give it to you, but only up to 10 lakhs. Guys, this is called available GTI, and here there is a section called section 80A. There are 2 shortcuts for remembering this. A is aggregate, that is the aggregate deductions under chapter 6A cannot be more than 10 lakh. Or you can use a shortcut available, aggregate or available, any of this, which is the first section, the section 80A. So section 80A is here. Thank you. This is section 80A, and which just tells you that only this much deductions will be allowed to you. Guys, do we have to check this every time in the exam? Yes. Specifically when you have capital gain income and casual income in your sum, then you definitely have to check for this. A lot of people do this mistake that they feel that entire 13,40,000 we can minus, but be very careful, the exam will not tell you that this has to be done. In fact, whenever capital gain and casual income is there in the exam, then you have to stop, even for deductions, even for calculating rates of tax, because it's slightly different. So this is the first section already, guys. Now the next section. So 80A done. Next 80B, thankfully we don't have any section like 80B, so it's out of the box. Yes, it's out of the window, throw it out. Not required, not important. Next is a section called section 80C. Very important, guys, highly important section, section 80C. Let's see what 80C does to us and what kind of deductions it gives us. Guys, first 80C, C for contribution. The shortcut is contribution. In this case, you are contributing to a lot of things. Most commonly, you are contributing for your retirement. You're contributing towards life insurance, you're contributing towards provident fund, etc. And you get an 80C deduction. Guys, in India, this is one of the most used deductions in the country. But the list is so long, and hence to master this list, there's a shortcut here which I'm going to tell you, and then we are going to use the shortcut to do the entire section. So if my income is 10 lakh rupees which I can minus. From that, can I minus 80C whichever I contribute? Yes. Let's take a very simple example. Let's take a very simple example here that I contribute 50,000 rupees to my life insurance premium. Can I minus 50,000? Yes. So it's a very simple concept. Just one second. Yes. So these are amounts that you contribute. Akshat, absolutely right. So there is a shortcut here for all the contributions that you can have. So here is the shortcut. Girls' life now needs 5 senior assets. So girls' life now needs 5 senior assets. What does a girl's life need now? It needs a provident fund. It needs mutual funds. It needs specified shares and debentures. It needs a house which has been bought through a national housing bank loan, and it needs Indian education. Guys, this is a list, and if you contribute for these things, you get a deduction under 80C. So let's see what all is there in 80C. First, if you contribute to Sukanya Samriddhi account, let's say guys, congratulations, you get married and you have a daughter and you start contributing to that Sukanya Samriddhi account for your daughter. When you contribute guys, there is a deduction under 80C. When that money accumulates and your daughter gets it, that is also exempt, but under section 1011A, which we saw in exemption chapter. Next guys, life insurance, very very important. I'm going to discuss it right in the end, this life insurance concept. So let's move ahead now. So life insurance guys, if you contribute for life insurance, what happens, we will discuss. This has some link to the exemption also, which we will discuss in overall together. Next guys, there is a very interesting NABARD bonds you can subscribe to. NABARD, you all know guys, it's a bank for agriculture and rural development. Guys, you and me, what we can do is, NABARD needs money, so they issue bonds and you can buy those bonds. If you buy those bonds, if you contribute to buying those bonds, you get a deduction. So NABARD bonds, yes. And similarly, there is a very interesting national savings certificate. Guys, it's not a certificate. You've not done some high jump or long jump, or you not swam across some ocean. No, it's a certificate for you paying money to the government. It's called National Savings Certificate. If you contribute 50,000, can I take a deduction of 50,000? Yes. But guys, this certificate is extremely exhausting. Why is it extremely exhausting? Because first, to give the money, you need to go to the post office, and then to remove the money, etc., you also need to go to the post office. So it's extremely exhausting. There is no online mechanism. That's a shortcut to remember something ahead. Next, this is the easiest way to take the 80C deduction. Just go to the bank, or in fact go to the banking app and make a 5-year FD. Guys, this is 5, and by 5 I mean a 5-year fixed deposit with a bank or a cooperative bank or a post office. If you make a 5-year FD, guys, this is a promise that you tell the government that, listen government, I am keeping the money safe for 5 years. Please give me a deduction. They will give you. But guys, what happens if in 3 years you break that FD? Then whatever deduction you got will be reversed in that 3rd year when you break that FD. So the FD should be there for 5 years. Next, can you open a senior citizen saving account? Yes, guys, there is an account like you and me can open, and there is an account for senior citizens they can open. That's called senior citizen saving account, which is generally opened in the post office, and you get some higher interest rate, etc. So congratulations, if you open that account and you put money, then you get a deduction under 80C. Next, guys, annuity plans. Every time you think about how you want to retire early, etc., so a lot of companies like HDFC Life, ICICI Prudential, they come up with annuity plans. What are these annuity plans? The word says annual, that is annuity. They say annually you pay some amounts to them. They will take that amount, they will accumulate it, they will invest it, and after a few years, maybe on retirement, they'll start paying you back. That is called annuity scheme. If you pay for those schemes, not receipt, if you pay for those, then it will be basically a deduction under 80C. Next, very very important guys, provident fund. Now what is provident fund or what is PF? Since we've not discussed salaries chapter, let me discuss what is provident fund in a very brief manner, guys. Provident fund is like your bank account. Can you put money in your bank account? Yes. Can some other persons also put money in your bank account? Yes. And that bank account is basically for your shopping, for your electricity, for your travel, etc. Same way, guys, a provident fund account is like a bank account where you put money, your employer puts money, and that account is to be used for retirement purposes. So you don't have to touch it very early. No, you don't have to touch it very early. It's mainly for retirement purposes. This is called provident fund account. Guys, provident fund account, please tell me, do we have many different types of bank account? A Kotak flexi account, an SBI zero balance account? Yes. Same way, guys, a provident fund is also different types. We have something called statutory provident fund, which is for government employees. We have something called recognized provident fund. We have something called public provident fund. But please tell me, guys, all of these are recognized, are legal provident funds. You invest money in them, the government gives you a deduction. The only one where you invest, the government doesn't give you a deduction is unrecognized provident fund, because as the name suggests, no one recognizes it. So that's an unrecognized provident fund. Next, mutual funds and shares and debentures, guys. Not all, very few mutual funds which have a lock-in period, and very few shares and debentures under a Rajiv Gandhi scheme which was there earlier. This is not important because the period to take this is over. This used to be a deduction earlier. Now mutual fund is still there, but specified shares and debentures, the period to start taking this deduction is over. So not important? No, not at all important. Next, guys, house. Very, very important. In India, they give you so many benefits to buy a house. If you remember house property chapter, if you buy a house and you rent it out, do you get a deduction for interest? If you buy a house and you stay in it, still you get a deduction for interest. But here, guys, this is not deduction for the interest. If you buy a house on loan and you repay the principal, guys, this is not for the interest. Please understand, this is for the interest. Sorry, this is for the principal part. So if you take a bank loan and you repay, and you're repaying the principal, you get a deduction under 80C. Yes, but the loan should be from approved sources. In fact, in this entire deduction chapter, guys, anywhere in this deduction chapter, if I use the word loan, the loan has to be from approved sources only. Next, so this is from approved sources only. Next, guys, just like NABARD, a national housing bank exists, but I've not seen the branch anywhere. But this bank is not for you and me, guys. This bank is for the bankers to go and get money, and they also need money. So can they also issue bonds? Yes. So if you invest in national housing bank bonds, then you get a deduction under 80C. And last, guys, if India has to well, people have to study well, just like you are. So if you pay your Indian education fees, tuition fees, you get a deduction. Yes, it has to be for Indian education. Yes, but not for yourself. For your children, you are paying Indian education fees, you will get a deduction. Yes, but some conditions, guys. First, it has to be Indian education, as the name suggests. Second, it cannot be private, unacademy or something like that, or yeshas. No, it has to be a proper legal, not private coaching, and it can be maximum up to 2 children. Guys, don't get me wrong, you can have 4 children also, but the deduction is only for 2 children. So if you have 3 children and you're paying all the 3 fees, pay the fees, please be a responsible parent, but you will get deduction only for 2 children. I hope this is clear, guys. So this is the list. I'll tell you what is most common in the exam. This one, principal repayment, is very important. So we'll talk a little more about that. Indian education is very important. We'll talk a little about that. Provident fund is very important. We'll talk a little more about that. 5-year FD is very important. We'll talk a little. And life insurance is the most important. I'll make 2 circles next to it because it's the most important deduction. So these are the most important ones, but the others also you should be able to remember if you remember this line called girl's life now needs 5 senior assets. Guys, this deduction is not given to Reliance Industries or ICICI. It's only for individuals and for HUF. So that means you can take it, I can take it, our HUF can take it, but no one else can take it. And please tell me guys, when you pay all these amounts, does the economy benefit? Yes. So hence, because the economy benefits, this is for residents and non-residents both. Yes, both. So instead of writing R and NR, I'm just going to write both, and you will understand what both means. Both means resident and non-resident both, because the government is happy. Yes, of course, Akshat, good, because you're contributing to the economy. All right. Now let's guys discuss these in slightly more detail. First one, principle. Let's go backwards. Indian education, you know, up to 2 children, cannot be private coaching and cannot even be capitation fees. What is capitation fees? Guys, when you're not very intelligent but you want to go to a very good college, you can give donation. I'm not talking about the under the table. Above the table, guys, you give donations, which is called capitation fees. It's legal, but you don't get a deduction for that. So no deduction for capitation, no deduction for private coaching. In the exam, if they write tuition fees, people mistake tuition to be private coaching. No guys, even your college charges tuition fee. So if there is tuition fee, will you take a deduction? Yes, unless they say private coaching. Next, so this one done. Yes. Principal. Guys, you're paying housing loan, EMI. You know what is EMI? Everyone in India, especially in the metro cities, are struggling with EMIs. When you pay your housing loan EMI, the principal payment you get a deduction, the interest you don't get a deduction under this section, that you know. So principal you get a deduction. And guys, besides the principal, if you pay stamp duty charges plus registration charges, those also you will get a deduction. Yes, those also you will get a deduction along with principal. But there's only one condition: the house should be ready. If it's an under construction house, then you don't get any of this. So the house should be ready. It can also be for stamp duty and registration, and the loan should be from approved sources only. Next, provident fund, recognize only unrecognized provident fund, guys, you don't have to look at. Next, 5-year FD. If you break it, it will be taxable again in whichever year you break it. After 5 years, of course, you can break it happily, no problem with that. Next, guys, for life insurance, I want to discuss here life insurance separately, so everyone pay attention to life insurance. Guys, life insurance is actually exempt. There is a section called 10(10)(d), D is death, which says that if an amount comes on death of a person, unfortunately there's a person who's no more and he had taken a life insurance policy and the family gets the money, on death of a person, it is completely exempt. Yes, it is completely exempt. And when the premiums are low, all the premiums are low. What is low, we'll see soon, but if all the premiums are low, then it is exempt. So on death of a person and on low premiums, it is exempt. Now what is low premiums, guys? For you and me, on 1st of April 2012, till that time, that means before that time, 20% of the sum assured was low. That means you could pay up to 20%. If your sum assured is 1 lakh, you could pay up to 20,000 every year as premium. That would be considered low. But on or after that day, this 20% has changed to 15%. Depends on when you're paying the premium. No, it depends on when you've taken the policy. So if the policy was taken before 1/4/2012, then every year low means 20%. And if the policy is taken on or after 1/4/2012, then low means 15%. And for handicapped people, guys, this has changed 1 year later. So for them, 20% was till 1st of April 2013, and after that it has become 15%. Sorry, for us it's become 10%, my bad, and for them it's become 15%. So for you and me, 20% reduced to 10%. For handicapped persons, 20% has been reduced to 15%. So they have two advantages. One is they still get a higher rate like 15%, and they get 1 more year, guys. It's till 2013 for them. This is low premium. Yes, this is low, up to 10, up to 15, up to 20. If even in one of the years you pay a higher premium, then sorry, that will be high premium. Even in one of the years it is high, it will become taxable. So this is basically exemption. Now let me link it to life insurance. Here guys, life insurance premium, you will get a deductions only up to the low amounts. Example, you have a life insurance of 1 lakh sum assured. You can pay up to 20,000, that is low, but you pay 22, then what will be given as a deduction here is only 20,000. So basically up to the low limits, yes, up to the low limits plus. Guys, life is very important everywhere. So whether you're in India taking the life insurance or you're a non-resident taking a life insurance abroad, life is important everywhere. So all life insurance policies premiums are covered. Example, you are paying life insurance policy premium in India, you get a deduction. But if your brother is a non-resident taxable in India, he'll get a deduction even if he's paid life insurance premium abroad. And last guys, everyone's life is important, so you can pay life insurance premium not just for yourself but even for your spouse and even for your children, no matter how large or how independent they are. Yes, any children. So this is self, spouse and children. Just a second guys. Perfect. So guys, this is how ATC works. This is applicable to both, as you know, individuals and HUFs only, but both residents as well as non-resident. Guys, this is very, very often used in the exam. Let me check if there's anything missing. This is the biggest deduction anyway. Perfect. Next guys, as we move ahead, the next one is called ATCCC and the shortcut is care. Guys, in life, of course, you have family who will care for you, you have children who will care for you, but the biggest care will be done by LIC. So if you have LIC's annuity plans, then ATCCC says that if you pay the premium for LIC's annuity plans, then you get a deduction under ATCCC. And last guys is ATCCD1. Guys, this one, there is just like your provident fund account, just like your bank account, there is another account called National Pension Scheme account. This account was started at CCD. That's a shortcut to remember this section, ATCCD. So what is this new account? Guys, you can have an ICICI account, you can also open an SBI account. Same way, you have a provident fund account, you also opened a National Pension Scheme account. National means it's for the whole of India, pension means something to do with retirement, and it's a scheme, so good, let's use it. So here, just one second guys. So here the government says that this is a scheme account, open it and contribute up to 10% of your salary. So you will get a deduction up to 10% of your salary. Yes, you can get a deduction up to 10% of your salary. So if your salary is 10 lakhs, up to 1 lakh, can you contribute more? Yes, but the deduction will be limited to 10% of salary. But during this guys, I got a little upset because I don't work for anyone, so I don't have a salary. So hence they said for people who are self-employed, it's 20% of their gross total income. Just a second guys, I'll be back. Alright. So here this is ATCCD1 guys, this is for NPS account, 10% of salary or 20% of GTI, which is great guys, but they gave us the shock of our lives after this. So we saw that there were so many ways to save our taxes. 10 lakh rupees we will never pay tax on because we have so many avenues to invest. This is almost like Zomato's offer that 90% off on your favorite pizza. You were really hopeful, but then they gave a shocker, guys. They said that there is a section called 80cc extent, and under this section they are limiting the deduction we can take under these three sections, 80C, CCC and 80CCD1 to 1,50,000. That means, guys, Zomato says you can take a 90% off but only up to 20 rupees or 30 rupees. That's how disappointing this limit is. This is a very small limit of only 1,50,000. So can I invest in all of them? Yes, you can put money, but you will get a deduction only of 1,50,000. They have a limit of this. Yes, there's a limit for these three. This 1,30,000, 1,50,000 only covers these three. Sir, if it isn't 20% for government employees, no, it is 20% for people who are self-employed. This is GTI. 10% of your salary or 20% of your GTI. Perfect. Now, guys, people were very unhappy with this, especially me. I'll tell you why. Because all my money used to be Akshat, don't confuse yourself with those numbers right now. Right now, only think of 10% of salary and 20% of GTI. But you're right somewhere. Guys, I used to put all my 1.5 lakh rupees into PF account. This was me. So I used to exhaust my entire limit of 1.5 lakhs by putting money in the PF account. So there was no room to put money in NPS account. So I went to the government, and people like me went to the government that, listen, our umbrella is getting full with some other deductions and we can't put money in NPS. So they said, don't worry, outside this limit we will create another small benefit for you, 80CCD1B, where you can put money, you can contribute to NPS, but up to 50,000. So guys, NPS always has a limit. Yes, check guys, this also has a limit. This was the first limit. This also has a limit, second limit. Alright. So guys, is this an addition or is this one bit within 1,50,000? No, it is not within 1,50,000. It is outside of it, guys. Always think, guys, if you're filling, let's say, a mug and the mug gets full, is there something else outside? If you're filling a bucket, this is a smaller bucket outside of 50,000. And last deduction, guys, again connected to NPS, but you are not doing anything in that. Watch out. This is 80CCD2. You are not contributing. This is your contribution. This is also your contribution, but here you are not doing anything and still you get a deduction. Guys, is it possible that you don't do something and you get a deduction? Yes, it is possible. Here, check it out. They say that you will get a deduction for your master's contribution. Guys, your master's contribution, he has contributed, you are getting a deduction. Why is this happening? This is the master's contribution and you get a deduction. And for this is the same thing that we saw in PGBP. So let me tell you why you are getting a deduction for whatever a master is contributing to your NPS account. Let's see it on the next page, guys. Very important. Watch it out. Guys, this is your master or your employer, and your salary is 10 lakh rupees. Let's keep your salary as 10 lakh. And he is contributing to your NPS account. He can contribute up to 10% of your salary. And if he's a government employee, central government, then 14% of your salary. Let's say he's not a central government employee, he's a normal employer, and he can contribute up to 10%, but he contributes 1,20,000. Is he contributing more? Yes. Can he do that? Yes. And when he does that, is he contributing to your NPS account? Yes. So whatever the master contributes will be added to your salary. Yes, this 1,20,000 will be added to your salary. I simply saying, if you have a bank account and I put money in that bank account, will you be taxed on it? Yes. So the master contributes 1,20,000 to your bank account, your NPS account. So will you get taxed on it? Yes. And will he get a deduction? Yes, he will get a deduction, but only 10% of salary, which is 1 lakh. Under which head, guys? PGBP, because it is connected to his business. So I'm repeating, guys, this: your NPS account, your master. He's contributing 1,20,000 to your bank account, so it will be added to your salary, yes, and he will get a deduction, but only up to 10% or 14%, so you got a deduction of 1 lakh. But now they say that because it's NPS and we want to encourage it, this same deduction what we gave to your master, we will also give it to you, same. So no change in calculation, no change in calculation. We will also give it to you, the same to same deduction. Now you might think, oh, it's double deduction. No, guys, it's not. Here they give a deduction. Here they add it to the income, and from the income only they are minusing, so the government doesn't lose out on too much, but you get happy because you get a deduction. So this deduction is under 80CCD2, whereby you get a deduction from master's contribution. So quickly summarizing NPS, when you contribute 80CCD1, 10% of salary, and if you're self-employed, 20% of salary, 20% of GTI. If that umbrella is full, then you have a small bucket outside, which is 80CCD1B of 50,000. And if your master contributes, will you get a deduction? Yes, same that your master gets, 10% of salary, and if your master is a central government employee, 14% of salary. Guys, this is difficult? Yes, it is. One of the most difficult parts is this 80CCC, CCD1, CCE. All these are slightly tricky, but once you get it, it is very easy. Also, you see exam questions, it gets better and better from there. What are the difference between CCD1 and CCD2? Let me tell you, guys. CCD1 is your contribution. So you contribute, it's basically like this. You go to a restaurant, you pay, you eat. This is your contribution. And you can contribute unlimited, no, 10% of salary or 20% of GTI. And it is within the limit of 80cc. Yes, it is within the limit of 80cc. So your contribution, there's a limit on the contribution, and it is within an overall limit of 1.5 lakhs. Whereas 80CCD2, you have nothing to do with it. Your master has put in the money. And you get a deduction, yes, automatically. So whatever he gets a deduction in PGBP, same deduction you get. Of course, it has a limit of 10% and 14%. 10% for normal employers, 14% for central government. So this is master's contribution and this is your contribution. Mainly that's the difference. Perfect. Alright, guys, you might get very confused with all this, and then you will see the exam question and nothing about NPS in the whole paper. And that's the beauty about CA Inter. People get so lost in some concepts that they forget that this might not even be asked every year. So hence, don't worry. If you're getting it easily, great, congratulations, pat your back. But if you're not getting it and you've studied this 5-7 times, you're still not getting it, leave it, move to the things that you know better. This might not even come in the exam. There is only 1 or 2% chance that this might come in the exam. Don't spoil another entire chapter for this. Yes? Alright. Guys, moving. The C series is over. Just recapping the C series, guys. We had 80C, we had 80CCC, and we had 80CCD. All these three were within a limit of 80CCE. If you forget the section, is it important sections? Yes, very important sections. By heart it, guys. CC extent. And then beyond this umbrella, we had 2 more sections. 80CCD 1 benefit 1B of 50,000 and 80CCD 2, which is the master's contribution. Alright, guys, this is till now the deductions chapter that we've seen. Now moving ahead, guys, to the next section, which is the D series. Guys, in 80C series, at one place you could also contribute for your family, only at one place, that is life insurance. You could contribute for yourself, for your spouse, and for your children. So your family size was very small there, but only for life insurance you had a small family size. D series, guys, your family size increases. Let's see how it increases. This D series is also applicable only to individuals and HUFs. And as and when we go ahead, you will tell me whether it's applicable to resident, non-resident, or both. Let's take the first one, 80D. In 80D, the shortcut is doctor's fees. You are scared of doctor's fees, hospital fees, etc. So you take medical insurance and you pay premium for medical insurance. And for that you're getting a deduction. Yes, there are two categories of people you can contribute, you can pay premium for. First category is self, spouse and children. Spouse, independent, dependent does not matter. Children, independent, dependent does not matter. And second category, you can also pay for your parents. Parents also, dependent, independent doesn't matter. So there are two categories of payments you can make. Very simple, guys. It's almost like going to a restaurant, paying the bill, you get food. Same way here, you pay, you get a deduction. They say the deduction for self, spouse and children is maximum 25,000 per annum. And if one of these people is a senior citizen, then it will be maximum 50,000 per annum. Is this maximum? Yes. So what if I'm contributing only 19,000? Then 19,000. What if I'm contributing 26? Then 25,000, unless any one person is a senior citizen. Here, guys, you can also contribute not just to private health insurance, you can also take the central government health scheme, which is basically the government run insurance. You have to pay other than cash, guys. Cash is not allowed while you're paying the premium. Premium has to be paid in a check, NEFT, RTGS, Paytm Karo, any of those mechanisms. Alright. Here, guys, for parents also, if you are paying for your parents' medical insurance premium, you get a deduction of 25,000 per annum. And if any of your parents are senior citizens and residents, guys, that's another condition. They have to be senior citizens and residents, then it's 50,000 per annum. Your parents don't get a central government health scheme kind of a benefit, but what your parents get is, if your parents are senior citizens and they don't have medical insurance or they don't get medical insurance because they are too old, then on the treatment in a hospital, if you spend money, you can take a deduction. This is only for senior citizens who don't have medical insurance. For their medical treatment, you can take a deduction, but overall within the above limit. Again, this also cannot be paid through cash. Now, guys, if your pocket money is 3,000 rupees a month and your parents say in that pocket money only you can watch a movie, but I'll not give you extra money, in that pocket money only you have to watch a movie. So guys, will you save money and will you watch a movie in that pocket money? Yes. And they say even if you watch a movie, the ticket limit should be 200 rupees. Same way here also, they have given you a pocket money limit of 25 or 50,000, 25 or 50,000, and they say within that pocket money limit only you have to get your test done, which is called preventive health checkup. These are basically your blood tests, etc. And if you get your preventive health checkup done, then you basically have a common limit. Both of y'all, the first category and second category, have a common limit of 5,000. Now first, is this 25 plus 5? No, this 5 is within that 25 etc. It's within. Second, it's a common limit. Think of it like a voucher. What if the first category utilizes 4,000? Then for the second category there will be only 1,000 available. So it's almost like a 5,000 rupee voucher. And this preventive health checkup can be paid in cash. Guys, in India we abuse this a lot. I'll tell you later how, but you can pay this in cash as well. And last, they say that if you pay for multiple years together, guys, sometimes on Policy Bazaar they say if you buy for 4 years, 5 years, you'll get a discount. So let's say today there's an Independence Week discount going on. So today, that is 17th August 22, you took a policy for 3 years, so 22, 23 and 24. It expires on 17th August 24 and you paid 30,000 rupees. So ideally, how much should it be for 1 year? 30,000 divided by 3. But they say no, it should be depending on how many years it is covering. So how many financial years does it cover? This is financial year 22-23. Next is 23-24. Next is 22-23, 23-24 and 24-25. Yes, sorry, my bad. It's a 3-year policy, so it will get over in 25. 24 and 25. It's a 3-year policy, 1, 2 and 3, which you paid 30,000 rupees. Ideally it should be 30,000 divided by 3, but the government says no, it is basically the number of financial years it covers. So let's see how many financial years it covers. It's basically 3 plus 1. So I'll tell you how. This is starting in the year 22-23, this is 23-24, this is 24-25, and this goes till 25-26 because August 25 means 25-26. So it covers 4 years. So it will basically be the number of years plus 1. So always, this was an exam question by the way again guys, so please be prepared for difficult questions as well. This, if they say it's for multiple years, then you can bifurcate it proportionately, but proportionately you will do number of years plus 1 unless the year starts on 1st of April like your financial year. Alright, Akshat, looking at your question, so is it possible to take ATD if in case spouse's parents are dependent on you? No, it is only for your parents, not your spouse's parents. Only for your parents, not spouse's parents. Perfect. So if you want to keep your father-in-law, mother-in-law happy, this is not the way. You can't take their medical insurance and take a deduction. You can pay, but you won't get a deduction. So spouse can take, definitely, spouse can definitely take. Alright, so this is ATD. Now guys, because this is also contributing to the economy, this will benefit both residents as well as non-residents. So this will also benefit both residents as well as non-residents. Alright, so this is done and dusted. Let's go to the next one guys. The next one is a section called section 80DD, which is in the D series. Again, this is only for individuals and HUFs, and in the end we'll see whether it's for residents or non-residents or both. Guys, some problem has happened in life and one of your people in your family is disabled and dependent on you. So is that a problem? Yes, because you spend extra money when someone is disabled and dependent on you. So they say that if the person who is disabled and dependent on you, it could be spouse, spouse children, it could be parents, it can also be brother and sister. So even siblings are now part of the family. Yes. So guys, it started with a small family and then the family size increased and now it increased further with even brothers and sisters, only real siblings also included. So if any of these people are dependent on you and they are disabled, then you will get a deduction, a flat deduction of 75,000. And if the disability is 80 or 80% or more, then you will get a flat deduction of 1,25,000. These are the deductions guys. Do you have to spend money? No. This is like the 24A ad hoc deduction. You get a flat deduction, no questions asked. Whether you spend money or don't spend money doesn't matter guys, you'll get a deduction. And because you don't have to really spend money, this is only applicable to residents. Alright, that is section 80DD. Remember, the family size is now increased. And last guys is section 80DDB, double dangerous bimari. Unfortunately, someone in your family, again this is for individuals HUF, someone in your family is not well, self, spouse, children, parents, brother and sister. Someone in your family is not well, and not well means they don't have like a small fever or cough or cold guys. There's some double dangerous bimari, like very dangerous bimaris which have been listed, and you need to hospitalize them and you spend some money on the hospitalization. The government says that we will give you a deduction. There's some background noise guys. Alright. So here someone is not well and they're hospitalized and the government says whatever money you spend on the hospitalization, we are sorry about it and we'd like to give you a deduction, but maximum up to 40,000 only. So what if you spend 52,000? Then sorry, not 52,000, we'll give you maximum 40,000. What if you spend 32,000? Then 32,000. Now it's a very low amount, but we can't afford to give more than this deduction. And if the person who is sick is a senior citizen, then in that case, and a resident, then in that case it is 1 lakh rupee maximum. Yes, but you have to spend amount here. Yes, you have to spend on treatment, only then you will get a deduction. So let's say you spend, guys, 52,000 rupees, but that person is not a senior citizen, etc., then you'll get only 40,000. Here there's a small trick, guys. What is the trick? Let's say you're getting this deduction, but you get some money from medical insurance, or you get some money from your employer for this purpose, for your medical treatment. Then they say we will first compare 52,000 with 40,000. We will compare this, and whichever is lower, 40,000 is lower, we will take that. So first compare, first see, and then whatever is the final amount, we will deduct whatever you are getting from medical insurance or from your employer, will deduct from this. So 52 or 40, which one will we take? We'll take 40, and from that we will deduct. Let's say 10,000 is coming from your employer, so we'll deduct 10,000. So the government is very smart, guys. They say that first we will compare and then we will deduct. So finally you'll get a deduction only of 30,000. I hope this is clear, guys. This is section 80 DDB. Again, quickly recapping this, but telling you guys, because you don't contribute to the economy, you are unwell and actually you are a burden on the economy. So this is only applicable to residents. Just 1 second, guys. I'll be back. Alright, so this is 80DD and this is 80DDB, and this was the D series, guys. Just want to recap the D series. One is for doctor's fees, medical insurance applies to both. The other two applies only to residents. One is an automatic deduction, the other is for medical treatment. And remember, always compare first, take the lower one and then do the deduction if you're getting some money from medical insurance or from your employer. So guys, this was D series over, C series over, A was already over. Now moving to the next one, which is the E series. Let's see what is there in the E series. Guys, the entire E series has some rules. Let's first follow the rules. E is for expensive. What makes things expensive? If I buy a phone, it's not expensive, but if I buy it on loan, then interest makes it expensive. So the entire E series is for interest deduction. So if I'm buying something, I pay interest. If I take an education loan, I'm paying interest. If I take a home loan, I'm paying interest. So on the interest, I get a deduction. And I for interest, I for individual. This is only applies to individual, not even HUF. Yes, not even HUF. And this is only on payment basis. That means if you don't pay the interest, will you get the deduction? No. So this is show me the money. Only if you pay, you'll get a deduction. Repeating, E series, E is for expensive. Expensive, what makes it expensive? Interest makes it expensive. It is only for individuals, I for individual, I for interest, and on payment basis. Let's start the first one here, guys, which is section 80E. E is for education. 80E, E is for education. And in education, guys, they say that if you've taken a loan, education loan, and not just for yourself, for self, spouse and children. Oh, so we are back with a small family. Yes, guys, 80C had a small family. It increased with parents, then parents and then siblings also, and now we are back to small family. So for self, spouse and children, if you've taken a loan, and obviously you know, guys, in the entire deduction chapter, the loan should be from which source? The loan should be only from approved sources. And if you are paying interest, yes, interest has to be paid, then you'll get a deduction, but only for maximum 8 years. That means the year you start paying interest, that first year, and after that 7 more years you will get. So totally 1 plus 7, that is 8 years you will get total deduction. And consecutive years, yes, consecutive years. So let's take an example, guys. In 2022 you take a loan for higher education and you're paying interest, but you start paying interest in 2024. So from 2024 you'll get 8 years deduction for, but if you pay early, no problem, but if you have to pay for 10 years, then deduction only for 8 years. Guys, this education can be Indian education or foreign education. How will you remember this? And how will you differentiate between this and ATC? Let's differentiate. First, ATC is not your education, it is your children's education. Here it can be your education also, your spouse's education also. There it had to be Indian education, here it can be Indian also and foreign also. There it was on the fees. This is not the fees, this is the interest on the loan. So there's a lot of difference between ATE and ATC. Anyways, the E series, you will never enter E series unless it is for interest. I'll tell you a personal tip. I have decided long back that I will never take 80 E series deductions. I never want to pay interest on any things that I buy or any loans that I take. Alright, so that is ATE. Let me just check there's anything else in the E series on the ATE part. Perfect. Next, guys, there was a section which is now removed. So I'll talk about that section very briefly. That section was called ATEE. Easy EMI, whereby you're buying a house, you're paying EMIs, and for that again interest deduction you would get. Yes, but that has been removed. Actually not removed, but this benefit was only for the year 16-17, which is now 5 years back. So hence they introduce a new, like how we have Golmaal Returns, Batman Begins, Batman Again. So same way, guys, here it is ATEEA, Easy EMI Again. What is this Easy EMI Again? Here you get a deduction for the interest. Yes, again interest deduction, because E series is anyways interest deduction. But what are we paying interest on? Here we go. You have bought a house and congratulations for the house, I'm giving you interest deduction, but I don't need it. I have section 24B waiting for me there. Then why do I need this? Because first, 24B has its limitation. 24B for SOP can only be deducted of maximum 2 lakh or 30,000. And for LOP, although I have unlimited deduction, still whatever I can set off with other heads is only maximum 2 lakh. You remember, friendly but shy. So somewhere 24B is great, but 24B has a limitation of its own. And if you want more than 2 lakh or more than this limitation, then welcome to ATEEA. So ideally, guys, what do you do when you buy a big cake and you can't eat it on one day? Can you eat one today and one tomorrow? Same way, when you pay a lot of interest, let's say your interest payment is 2,75,000 and it's an SOP, what do you do? Take 2 lakh here and the balance you can take in ATEEA. Yes, you can split it up between these two sections. So Easy EMI again, it's for basically a house loan. Obviously, you know the loan has to be from approved sources only, guys. Whereas in 24B it can be from any source, but for this EEA it has to be from approved sources. There are some conditions, guys. The house should be small. That means the stamp duty value should be up to 45 lakhs maximum. It should be your first house. You should not be a very serial house owner, guys. It should be your first house. It can be LOP, SOP does not matter. LOP also, SOP also does not matter. So these are some conditions for taking ATEEA deduction. Guys, how will we know that what we can take? I'll tell you a very simple. First, calculate the interest. If it's SOP, then it's very clear you cannot take more than 2 lakh there. The remaining will come here, overflow. And if it's LOP, then it's a better thing to do that take 2 lakh, because even if there's a loss, you can take it set off only maximum 2 lakh. So it's better to take some here. But guys, here there is a limitation. It's not unlimited. The limitation is 1,50,000 per annum. Yes, you can maximum take 1,50,000 per annum. Let's do a difference between this and 24B. 24B, no limit. For LOP, SOP, there's a limit. Here there's a limit of 1.5 lakhs. In 24B, you can take it even if the loan is from unapproved sources. Here you can take it only if it's from approved sources. There is no limit on the number of amount of house. Here the house should be maximum 45 lakhs stamp duty value. There it can be first, second, third, fourth house. Here it has to be only the first house. So if interest deduction for house is taken, then will be taken here, then will be, you can't take both anyways. Let's take an example, guys. Your interest deduction is only 75,000 and you've already taken it in 24B. Can I take it again here? Obviously not. You can only take one deduction for one payment. And 24B you can take even if it's paid or payable. Here you need to pay, you need to show me the money. That is 80 EEA. Again guys, only for individuals. And please tell me, is it for resident, non-resident, both? It's for both, because guys, whenever you take a loan and you pay interest, you help the economy. And that brings us to the last section of E series, which is 80 Easy Electric Bike, EEB. Guys, what is this easy electric bike? Again, it's a deduction. Yes, again E series, so interest deduction. But why and what are you paying interest for? Guys, here you've taken an electric vehicle on loan. It can be a bike, it can be a car, it can be a truck, it can be any electric vehicle, and you're paying interest up to 1,50,000 per annum. You can take a deduction here. Yes. What if it's not for business purpose? Doesn't matter, guys. This is not PGBP. So whether it's for business purpose, personal purpose, Sunday purpose, Monday purpose, doesn't matter what purpose, as long as you are paying interest on a electric vehicle. Here guys, there are one condition here also, that loan should be from any approved sources, but it cannot be from NBFC. That means it can be from a bank, it can be from, but NBFC it cannot be. Here it can be any approved source including NBFC. This house should have been purchased between 1st April 2019 to 31st March 2022, and this electric bike or electric car should have been sanctioned between 1st April 2019 to 31st March 23. Alright, so quickly let's recap this section, guys. 80 EEB, are we still in the E series? Yes, it's an interest deduction. An interest deduction on a loan for electric vehicle up to 1.5 lakh rupees. Yes. It should be from approved source. NBFC okay? Yes, NBFC okay here. For house, NBFC is not okay. It should be between 19 and 2023. The loan should be sanctioned between that day. You can purchase the bike in this period, but the loan should be sanctioned between those dates. And of course, it should be paid. All the E series is only if you are paying the money. Show me the money. Guys, this is 80 EEB. EEA done, EEB done, the E series done. We are 1 hour 15 minutes into the lecture. We are going to do one more section and then take a small break. Here we go. E, there is nothing like F, and now we are entering the G series, guys. The G series is all about giving money, like donating to PM Cares Fund, donating to somewhere else. So it's all about giving, and in that there is a section called 80G, which we will do very soon. There is a section called 80GG, which also we will do very soon, but there is a reason why we can't do them right now. Then there is a section called 80 give around, which we will do now. Then we will move ahead to the other sections. So right now let's do 80G give around. Let's quickly do this section. The section's name is 80 give around. If you remember yesterday's PGBP discussion, in PGBP, if you wanted to do scientific research, could you write a check for Baba Ramdev's company? Yes, you could do that. But guys, what if I don't have PGBP? What if I only have salary? I have a good salary and I want to donate money. I can't take scientific research deduction because PGBP door is closed. That's not fair. So the government says, don't worry. If you don't have PGBP, but you still want to contribute for things like scientific research, etc., you can take a deduction under 80 GGA. This is a deduction for contribution like scientific contribution, etc., when you don't have PGBP. What if I have PGBP? Then take it there. Why not take it there under section 35? It's better. So this is only when you don't have PGBP. And here, can I pay in cash? Yes, you can pay in cash, but only up to 2,000. What if I pay 5,000? At least 3,000 will be disallowed, 2,000 will be allowed. No, cash means very strict. If you pay 5,000, the entire 5,000 will be disallowed. This is 80 GGA give around. So for all E series, interest has to be paid to get deduction. Absolutely right. If you don't pay, you don't get a deduction under E series. So here is a shortcut Akshat. E series, interest only for individual and on payment basis. GGA, no limit. No limit is basically your available GTI. What is your available GTI? We saw 10 lakhs. You can donate everything. No problem. Be as generous as you are. Perfect. Guys, that is GGA. Now moving ahead to the next one. 80 GGB and 80 GGC. Give big and give chota are the two examples for give big and give chota. Let me tell you what are these sections, guys. First of all, in India, we have a lot of political parties and they need a lot of money. So can we donate to them? Yes. But if you remember, we are not able to take a deduction under PGPP. 37(2)(b) disallows any payment made even for advertisements in political parties' newspapers. We don't get any deduction. So here, if you give big, that means you donate big amounts to political parties. Yes, to political parties if you donate, or if you donate to electoral trust. What are electoral trusts, guys? Electoral trusts are those people who will take your money, and so that you are not blamed to donate that you're only donating to one party, you can donate to electoral trust. They are no name and they will donate ahead to political parties. So whether you're donating to political parties or electoral trust, you get a deduction here. Guys, political parties have a lot of cash already. You know them. They are infamous for having a lot of black money. So no cash. Yes, no cash to them. And if some amount has been disallowed under section 37(2)(b), can you take it here? Yes, that amount which was disallowed there, we close the door there, we will open the door here for that. And what is GGC, guys? GGC is chota. Chota basically means for other than company. Guys, this is bada, this is basically company when they donate, and this is other than company. So other than company like you, me, etc., if we donate, then we will get a deduction under 80 GGC. Again, here no cash, you cannot donate cash. Here for us, political party or electoral trust both, and here guys, for you and me, 37(2)(b) cannot be taken. That deduction which was not given there, will it be given here? No, it's not given here also. So if you put advertisements in political parties, newspapers, etc., not even there, not even here. People use this to take black cash and take deduction at the same time. Yes, they can. Lots of manipulations happen with these sections, but we have to look at it from an exam perspective. Exam perspective, no cash and political donations are a deduction here. So this is the G series, guys. The two G series ones which are left, we have to do it at the end because there is some reason for which we cannot do it right now. So G is done. Let's go to the next one. But it's 1:20. We'll take a 2-3 minute break. We're around halfway the lecture. 3 minutes break, coming back and then continuing. Guys, in this session we are only and only going to focus on deductions. Any questions in the chat box, please? Alright guys, moving now to the next series after the G series. A, B, C, D, E, F, G, H. Thankfully there is nothing like H. G, H, I series is there but at CA final. Now next is J. Guys, in India there are a lot of young people and they are scared because the country as a whole should be able to add jobs. So if you add jobs, the government is very happy and they give you a deduction under a section called 80 JJAA, job add. All these shortcuts you will find in my quick book. The link to that I could send you right away. Just 1 second. Perfect. Alright. So this is 80 JJAA, and in 80 JJAA, just one. Perfect. The more jobs you add, the more the deduction you will get. So let's see what it is. The government says, listen, are you adding jobs? Yes. Are you paying them salary? We'll give you a deduction. But salary deduction we anyways get in PGBP. But no, over and above that, 30% of their salary, whatever the salary you pay them, 30% of that you will get a deduction over and above. So if you're paying them 10 lakh, then 3 lakh more you will get a deduction here under this section. For how many years? For 3 years. I'll tell you how 3 years has to be seen. Every year, let's say this is the first year, then second year and third year. Every year you have to check if you've added new jobs. Example, let's say this is the first year and you had 100 jobs at the end of the start of the year and 120 jobs in your employees in your organization, so you added 20 employees. Next year you had 120 but you fired 5, so you had 115, so you added no more jobs here. And next year 115 and you had 125 at the end, so you added 10 more jobs here. So fire, hire, whatever is the net amount, these are the employees for which you will get a deduction. Salary, yes, 30% additional you will get. So each year is different. Yes, each year is different. You have to see whether you've added employees in each year. Now you get a deduction of 30% of the salary that you pay. Salary will include everything that you pay them except retirement benefits and except your contribution to the provident fund that you will not include. But guys, there are some conditions, and if you don't fulfill those conditions, then sorry, you will not get this deduction. What is the first condition? You cannot pay them salary in cash. Next, you cannot pay them more than 25,000, but that is stupid. Why should I not pay them more than 25? Because they want to give this deduction only for lower employees, lower level employees. Next, you have to contribute to their provident fund. Basically, if you don't contribute to the provident fund, you don't get the deduction. And very important, you have to employ them for at least 240 days in a year. And if you're in the laugh industry, leather, apparel and footwear, then you have to employ them for 150 days at least in the year. That means I can't employ anyone in the month of Jan, Feb, March because I'll not be able to employ them for these many days. Don't worry. If in this year you can't employ them for so many days, then don't worry. We will again check next year for these same employees, but afresh, yes, afresh next year. And in next year, if you employ them for 240 or 150 days, then whatever deduction we were supposed to give for those employees this year, we will give it next year. What if next year is the fourth year? Still. What if next year you don't employ any new employees? Still, you will get the deduction. Whatever you're supposed to get this year, you will push it to next year. Guys, this is available only to people who are subject to audit. Yes, because the government wants to check this calculation of employees, etc. And it is available for 3 years, consecutive years, whichever year you decide to start. After that, 2 more years. Guys, that is 80 JJAA. Let me just check if there's anything else in that. And guys, because you're creating jobs, this is applicable first to anyone, yes, both residents as well as non-residents. I forgot to mention it here, guys. The entire G series you're giving away money, so hence the government says both to residents as well as non-residents. Now the series ends, guys. J is only single. The next one is also alone, guys. J, A, B, C, D, E, F, G, H, I, J, K, K, L, M, N, O, P are not there. Straight Q. It's there, P is there, but at CA final. Next one is Q, guys. While you study for CA Inter, you realize that you're a very good author. You write very good books, and let's say you've written a love story, or you've written a tragic story, or you've written some science fiction. So you've written a book. So the government is very happy that you've written quality books. Just 1 second. Yes, mom? Alright. Guys, the next series is the government happy, very happy that you're writing quality books, and they say, listen, from these books you're going to earn royalty. Where will that royalty go? In PGBP or IFOS? Let it go there. But when you come to GTI, from GTI we'll give you a deduction under 80 QQB quality books of maximum 3 lakh rupees. Yes, so this is a deduction for writing books. But what kind of books, guys? LAS books, literary, artistic or scientific books. And what is the deduction maximum you will get of 3 lakhs? So guys, how does it work? Let's say you earned royalty of 4,80,000 rupees. And to earn this royalty, you have incurred 80,000 rupees expense. So where will these both numbers go? These both numbers will either go in IFOS or will go in PGBP. So it is 4 lakh rupees which will go into GTI. From GTI, guys, you will get a deduction of 80 QQB of maximum 3 lakhs. But there is a step which you have to follow. Step 1. First step is the royalty. If you are getting as a percentage, it should not be more than 15% of sales. So example, if you are getting 1,80,000, which is 18% of sales, you can take it, you can tax it. See guys, taxability, there is no problem, but for this deduction purpose the maximum amount should be only 15%. That's step 1. So let's change that. Let's change our example only to suit it. Let's say you earned 1,80,000 and that is 18%, and your expense was, let's say, 10,000. So how much will be taxable in your IFOS or PGBP? 1,70,000. Will this 1,70,000 go to your GTI? Yes, and from that you will get a deduction. Let's see how you get the deduction. First, they say we will not give a deduction of 80%, 18%. For deduction purpose, it should be 15% of sales. So what is 15%? If 18% is 1,80,000, 15% will be 1,50,000. Next, step number 2. If this royalty has been earned abroad, then you have to get it back into India within 6 months after the year ends. Basically, the year ends in March. So by September, you should get the money. Let's say this entire royalty was earned abroad and you've been able to get only 1,25,000 into India. So only 1,25,000. Now this will be considered, yes, lower amount. And step 3, they say if you already got a deduction of some amount in PGBP or IFOS, we will not give you a deduction here again of it. So remove that money or remove that amount. So 10,000 I'm removing. So 1,15,000. So finally, will we get a deduction? Yes. Of how much amount? 1,15,000. What if this was 3,15,000? Then maximum 3,00,000. So that's the concept, guys. Quickly recapping, this is only and only for individuals who are authors and co-authors, and this is only for residents because you are not basically contributing anything to the economy. So to individuals who are authors and co-authors, only to residents, there's a deduction for writing quality books. No, there's a deduction for earning royalty income. The royalty income and the expense for earning the royalty goes into PGBP. So this is your PGBP or IFOS, which will go into your GTI. From GTI, you'll get a deduction, but step number 1, 2, 3. What is step 1? Maximum 15% of sales if it is on the basis of percentage. What if it's lump sum? Then don't worry about this first step. Second step, see how much has been coming into India from abroad within 6 months. What if entire royalty is from India only? Then don't look at second step. And third step, whatever deduction you've already got in PGBP, have you already got a deduction? Yes, then I will not be able to give you that again here. So whatever deduction I want to give you, I'll reduce 10,000 from it. So this is the expense, is an example of an expense. I hope that is clear. And finally, the number is 1,15,000. If the number was 3,15,000, I would limit it to 3,00,000. Yes, guys, let me know if step number 3 is clear. Akshat, is it clear now? Whatever expense you have incurred and you've taken a deduction, that amount will be reduced from this number. All right. I'm going to take silence as an answer. Yes. So I'm going to move ahead, guys. So this is 80 QQB, and very similar to that is the next section. Guys, you are again earning royalty, but this time not from a book, from a patent. You have registered a bat and you're earning a royalty from a registered bat. Let's say the mosquito racket, guys. The government is very happy with your patent, so they give you a deduction under 80 RRB. Let's take an example. You are earning 6 lakh rupee royalty. Where will that go? PGBP. To earn this royalty, can you have expenses? Yes. Let's say the expenses are 60,000 rupees. So can I minus that? Yes. 5,40,000 is your income, which is in PGBP or in IFOS. It will come out of the room, it will go to GTI and will stay there. From GTI, you will get a deduction under 80 RRP. This is a deduction. Yes. For royalty on what books? No, this is a royalty on patent. It is again given to only individuals and again only given to residents, because here you don't spend money, you're earning income. Next, this is a maximum again of 3 lakh rupees. So we have 3 steps here also. Let's check out. First step, nothing. That 15% thing does not apply here. Next, second step, out of this 6 lakh, how much was earned in India? Let's say out of this 6 lakh rupees, entire thing was earned abroad and you got only 3,79,000 into India. So 3,79,000. And Akshat, this is your again the same question that you had. Step number 3, how much deduction was already taken in PGBP? 60,000 you already took the deduction, so that I will not be able to give you again here. So 60,000 from my deduction I will remove it, so 3,19,000. Can I take 3,19,000? No, I will limit it to only 3 lakh. So from my GTI I will minus a reduction of 3 lakh under 80 RRB. Quick recap: royalty on registered VAT. This is a reduction for patent royalty only for individual residents, maximum 3 lakh. Step 1, step 2, step 3. Step 1 doesn't apply, step 2 and step 3 applies. Perfect. Guys, this is 80 RRB, 80 QQB done, 80 RRB done. Very few sections left and this chapter will get over. Then only 80 G and GG we have to see. Guys, in India we love doing something, is we love saving. During COVID a lot of us could survive well because we had good amount of savings, and when we save, what do? We put it in a bank account, and from that we earn interest. So this next section is the government's way of saying thank you for saving money. They say that if you have any interest from your saving bank account, so there is a section called section 80 TTA, 10,000 annually. This is a deduction, yes. For what? For earning interest income. So interest from which bank account? Interest from only saving account. Yes, only from saving account. That interest, let's say you are earning interest of 43,000. Where will it go? First 43,000 will go in my IFOS. Yes. From there it will come to my GTI and then I'll get a deduction. The government says, sorry, I can't give you such a high deduction. I will be able to give you a deduction of maximum 10,000 per annum. This one is only and only available to individuals and HUFs. HUFs also get this, and this is because you are inculcating a habit of saving, and putting money in a bank helps the economy. It is applicable to both residents as well as non-residents. But what if this is FD interest? Sorry, on FD interest you will go into IFOS but you will not get a deduction. So this is only for saving account. Yes. And guys, main thing, it is only for people only for people who are below 60 years. So individuals who are 40, 45, 50 can take it. Yes. HUF, there is no age, so HUFs, all HUFs can take it, but only for individuals below 60 years. But this is not right. People who are 60 and more deserve this deduction, but don't worry, for them we have a bigger deduction, which is the next one, that is 80 TTB. This is only for individuals who are 60 years or more. So basically the party is divided. One party or one room is for people who are below 60 and HUFs, and the other room is only for 60 years or more individuals. Here this is the interest that you earn from saving account, also from FDs, and the maximum deduction here is a huge 50,000 per annum, and because it is so huge we can only afford to give it to residents. Alright guys, while we look at both of this, we already know an exemption, guys, under section 1015 from your post office saving account. From post office, if you get interest, 3,500 and 7,000 is exempt anyways. So first you have to remove it and then take this exemption. Example, what if from the post office you get interest of 19,000? Then from 19,000, first remove 3,500. So that is 15,500 will go into my IFOS. Yes. And from 15,500 you'll get a deduction of 10,000 if you're in this section, and maximum 50,000 if you're in this section. That is 80 TTA, TTB. Let's differentiate between the two, guys. First, TTA is for younger people, TTB is for older people, B is for big. Next, TTA for individual and HUF, here it's only for individual. Next, TTA has a very small limit, 10,000, TTB has a huge limit, 50,000. Because 10,000 is small, it is available to both residents and non-residents. Because 50,000 is big, is only available to residents. The small one, TTA, is only for saving account. TTB is for saving as well as FD, that is TTA and TTB. Next, guys, there was a section called 80DD, disabled and dependent, where your spouse, your children, your parents or your siblings were disabled and dependent on you. So did you get a deduction? Yes. But guys, what if you yourself are disabled and you're not dependent on someone? You have a CA degree, So you are a disabled person, but you're not dependent on someone. So, but still, guys, you have to have some expenditures. So the government says if you are disabled, then you can take the same deduction of 75,000 or 1,25,000. Same way you can take it ad hoc. You don't have to show any expenses. You will get it. But this is you if you are disabled. When is 80DD taken? When someone else who's dependent on you is disabled. But what if there is both, guys? What if your brother is disabled, he is dependent on you, and what if you are also disabled? Then you will get two deductions because there are two disabled people. First 80U you will get for yourself, and for 80DD you will get for your brother. If it's 80% or more disability, then 1,25,000, otherwise 75,000 is a deduction. And guys, all these deductions you will get. Of course, you have to file your return of income. Tell the government that listen, saving interest so much. Listen, education loan interest so much. Listen, I donated to PM Cares Fund so much. So you have to file your return, yes. But in some cases, you have to file your return on time. Which are those 4 cases or 3 cases, guys, for which you have to file your return on time? Join return queue. Because you will get these deductions only if you file your return and within time. That means if you are 1 day also late, you will not get this deduction. What is this? JJAA, RRB and QQB. These 3 deductions, and hence the join return queue is a shortcut. The moment you heard this, you joined the return queue. So JJA, RRB and QQB, guys, if there is any specific question, do let me know. Otherwise, guys, I'll tell you one solution. If you have any specific query, you can WhatsApp that query, audio query to me. If it's a general big question, this is my WhatsApp number. This is definitely a number which any student can use to WhatsApp any query, audio note, and I'll send you an audio note back if it's a big confusion. If it's something very small and particular, you can always ask me here and I will reply back. Alright. So this is JJA, RRB and QQB, and this is a section called 80AC. They say that for these 3 and only these 3 deductions, you need to file a return of income within these time limits. I'll repeat one last time the difference between 80U and 80DD. Guys, both are for disabled and dependent. No, this one is for disabled and dependent. This one is when you are disabled. But both are deductions only, yes. So let's understand, guys. In your family, there is only one person who's disabled, is your brother, and he is dependent on you. Can you take a deduction? Yes, 75,000, 1,25,000. But what if in your family 2 people are disabled, your brother is also disabled and you are also disabled? So then for yourself disability, you can take under 80U, and for your brother's disability, you can take under 80DD. Both you will get, both deductions you will get. Yes, I hope it is clear. The amounts, the ad hoc, everything is the same in both cases. Only thing is section differs for both. Alright. Guys, that is it. So now we've come to the last 2, which is 80G and 80GG. But why did we keep it in the end, guys? Is it like some dessert which is reserved for the end? No, we could do this because there's a calculation which involves all other deductions in this case. Let's see. First we'll look at 80GG, which is basically ghar ghar. The shortcut is ghar ghar. Let's see what this ghar ghar means, and there's a problem, guys. I'll tell you what the problem is. Guys, those people who have a job and who get HRA, house rent allowance. Example, tomorrow you get a job with KPMG and they give you house rent allowance. That means money in your hand to get a house on rent, and you get a house on rent, you get a deduction or an exemption here. So are you happy? Yes, anyone giving you an exemption, you'll be happy. Example, let's say you get HRA of 2 lakh rupees. You get an exemption of, let's say, 1,70,000. So only 30,000 is taxable. Yes. So this is your exemption. Are you happy? Very happy. But there are 2 people, and this exemption why you get is because you've taken a house on rent. So I repeat, you have a job with KPMG, they are paying 2 lakh rupees to use house rent allowance. You go and take a house on rent. Do you get an exemption? Yes, of 1,70,000. You are very happy. But there are 2 people who are not happy, guys. They are unhappy. Let's see why they are not happy. This guy here, let's call him Mr. A, he has also taken a house on rent. He also has a job, but his employer is not paying him any HRA. And because he does not get any HRA, he does not get any exemption also, but he also has taken a house on rent, he also has a job. Similar like you, but he is not getting any exemption. And this guy, this sad guy is me, because I am also, let's say, taking a house on rent, but I am self-employed, so no one is paying me HRA, and hence I also don't get an exemption. So Mr. A and Mr. B went to the government to complain that this is not right. All three of us have taken a house on rent. Why is that only that guy gets an exemption and we don't get an exemption? So even we want an exemption. So the government says, listen, exemption is difficult. What I will do is I will give you a deduction under 80GG Gar Gar. We said, okay, tell us details. They said this will be available to individuals who take a house on rent. Okay, tell us more. The deduction will be least of the following three amounts. Okay, tell us which three amounts. First, 5,000 per month. Alright, 5,000 per month means basically if I have taken a house on rent for 12 months, 5,000 into 12, yes. B, the rent that you are paid or payable minus 10% of ATI. What is ATI? I'll tell you very soon. Minus 10% of adjusted total income, or 25% of adjusted total income. You said, great, I'll do the calculation immediately. The first one is very easy to calculate, guys. The second one, let's say you're taking a house on rent on 30,000 a month. So this is also, the first part is easy to calculate, but you don't know what is ATI. So you ask the government that, government, tell us what is this ATI? How can I take 10% and 25% of ATI if I don't know what is ATI? They said ATI basically means as the government says, let me tell you what is adjusted total income. They said that whatever is your available GTI, not your total GTI, guys, only available. If you remember, from 13 lakh 40, only 10 lakh was available GTI. From your available GTI, you minus all the deductions, ATC, D, E, JJ, QQ, all except this GG. So let's say if you minus all deductions, it comes to you minus 4 lakhs. So what is the remaining? 6 lakh. That is your ATI. Alright. So now you'll be able to calculate. Yes, now I'll be able to calculate. So let's calculate, guys. Rent paid or payable is 3 lakh 60. Minus 10% of ATI is 60,000. So this becomes 3 lakh. This is into 12 months. This becomes 60,000. And 25% of ATI is 6 lakh into 25% is 1 lakh 50. So have you got all the three numbers? Yes. The least of them, that is 60,000, will be your deduction under 80GG. So quickly recapping, what is 80GG? 80GG is Ghar Ghar. This is only for those people who don't get HRA allowance. Guys, these are people like me who've taken a house on rent, or people like you who have a job but don't get HRA. Both of us have taken a house on rent. So the government says, don't worry, you'll get an exemption, or we are calling it deduction, which is least of the following three. A, 5,000 per month. B, rent paid minus 10% of ATI, or C, 25% of ATI. What is ATI? ATI is basically nothing but your available GTI. Remember, guys, not your total GTI, available GTI. So if they've given you GTI, then remove everything which is unavailable, find the available one, and minus all the deductions except 80GG. That's the reason I've kept it at the last, because you have to minus all deductions except this one. So in the exam, if 80GG comes in the exam, it's very hidden, guys. How is it hidden? They will say you have paid some rent. That's all. The moment they say you paid some rent, house rent, then you have to do this calculation. You should know 80GG is very hidden in the exam, guys. I'll tell you three deductions which are hidden, guys. 80TTA is very hidden. They will never tell you. But if you see saving bank account interest, you know it's 80TTA. 80TTB is also hidden, and 80GG. These three are hidden. Always check for these three deductions. Alright, that is 80 GG. And last, guys, is 80G, which is give. Basically, it is donations. So it's very simple. You're donating money to the government. The government says, great, congratulations, you've donated money to me. So I'll give you a deduction under 80G. Your available GTI is 10 lakh. If you've donated 40,000 to me, you'll get a deduction under which section? Under 80G. But the government says, listen here, I have 4 categories of donations. Please tell me which category are you donating. How does it matter? It matters because there are 4 categories. In the first category, if you donate 1 lakh rupees, you will get a 100% deduction. That means if you donate 1 lakh, you will get a deduction of 100%, that is 1 lakh. In the second category, this magic, guys, if you donate 1 lakh, you will only get 50% deduction. Yes, this is shocking. This is the first category, this is the second category. In the third category, again, if you donate, you get 100% deduction. And in the fourth category, again, if you donate, you get 50% deduction. So how do you remember, guys? 4 categories, and it's like a seesaw: 100%, then 50, then 100, then 50. So you have 4 categories of donations depending on where you donate. Example, let's put the same amount, guys, 40,000. So you get 40,000. 40,000 here, you'll get 20,000. 40,000 here, you'll get full 40, and 40,000 here, you'll get only 20. But then why did they not combine the first and the third category? Because there's a reason which you will see very soon. Guys, how will you by heart this entire list? Do you need to by heart it? I have given the shortcut in my quick book. You don't need to by heart it. You just need to remember that shortcut, like communal PM, relieved and defended Armenia and Africa from blood and illness, PM cares, Army cares, cleans Ganga. So those are 4 categories, but I'll tell you the more important one from your exam perspective. The PM cares fund is here. It was a COVID fund, so it is in the first category. And any charity, example, your Tirumala Trust, etc., all these charities are in the 4th category. If you remember this also, it will be great. If you can't remember all of them. Does the exam tell you which category? Generally no. They want you to guess, and hence that list is important. If you can by heart, I have given you a very good shortcut as well. Now let's put numbers, guys, here. This is 40,000 and your available GTI is 10 lakhs. So can I take a deduction under 80G? Yes. How much deduction can I take? 40,000. Yes, entire 40,000. Here I have donated 40,000 also to this second category, which is Jawaharlal Nehru, Indira Gandhi, Rajiv Gandhi and Broad. These are 4 funds. And if I have donated here 40,000, I'll get a deduction under 80G, but only 50% of that, basically I'll get a deduction of 20,000. This is so simple. So why did we do it right in the end? Because, guys, these 2 people, you will get 100% and 50%, but subject to a limit. Subject to a limit. What is that limit, guys? Imagine it's a cake. First, you have to figure out what is the cake size. The cake, and once you figure the cake, it's basically, let's say, imagine you and your sibling, guys, 2 people, 2 children at home, and there is a cake which has come home. Who gets to eat it first? First, the third category gets to eat it. And if there is any balance, who gets to eat that? The balance, the fourth category gets to eat. So I'm just trying to figure out what is the cake size. The cake size is 10% of your adjusted total income. Now again, adjusted total income, yes. What does it mean, guys? It means your available GTI minus all the deductions. Yes, all C, D, E, F, every GG also, GGA also, all deductions except this one. So let's say all deductions are 4 lakh. So what is your ATI? Your ATI is 6 lakh. And what is 10% of that? 10% of that is 60,000. Now let's say you donated here 50,000 and you donated here 30,000. Let's now see how it works and how much deduction can I get for the third and fourth category. Guys, first and second category, if they come in the exam, you don't need to worry at all, because first and second category don't need any of this calculation. This calculation is only for the third and fourth category. Let's see how it goes now. You have donated 50,000 rupees, yes. First compare 50,000, that's your hunger, with the cake size. The cake size is 60,000, which is lower, guys. 50,000 is lower. So first you compare, yes. First C comes and then P comes. I'll tell you what is P. First you compare 50 or 60, which is lower, guys. 50 is lower. And then you do the percentage. How much percent? 100%. So I will get a deduction of 50,000 full. Yes, full. Now out of the cake of 60,000, guys, 50,000 has already been eaten. So what is the balance cake remaining? The balance cake is only 10,000. I repeat this, guys. First you compare whatever you donated and with what is the cake size or what is the limit. So 50,000 with 60,000 you compare, which is the lower one. 50,000, that you take, and that you first compare and then do percentage. Percentage is 100, you take 100%. And now, guys, this is done, this is done, this is done. We go to the last one. How much did you contribute? 30,000. What is the cake size now left? 10,000. First you compare. So when you compare, which is lower, 30 or 10? 10 is lower. And then you do the percentage. 50% of 10 is only 5,000. So while you donate 30, you will get a deduction only of 5,000. So again repeating, guys, if in the exam first category comes of donations, just blindly take that money, deduct it under ATG. If second category comes, take that money blindly, do 50% and take a deduction. But if the third and fourth category come, then stop, do all the deductions first, including every deduction you will do, guys, but not ATG. Even if first and second category are there, but the moment third and fourth are there, you stop. Do all the deductions, find out your 10% of ATI, and then only move forward. So hence, guys, there are two deductions which will be done in the end. ATGG, if it comes in the exam, you will do it in the end, and ATG, but the third and fourth category only, if it comes, then you will do it in the end. So obviously a question will come in your mind, what if both of them are given, and what if both of them you have to find out? I promise you that will not be a question in the exam, because it's a quadratic equation which will take at least half an hour to solve. They don't have the marks in 60 marks to give this. So if both come, I'll tell you how both will come. In ATG, they will give you the first and second category, for which you don't need ATI, so that can be minused, and then you minus ATGG. So this, guys, by the way, here also, can you pay in cash? Yes, 2,000 rupees. This is applicable to everyone, yes, because why does the government stop you from donating? It applies to all. Yes, it applies to all. So quick recap on this. ATG, G is give. You're giving money away to donations. Yes, for everyone, welcome to this section. 2,000 rupees is the maximum limit for cash. If you pay more, the entire thing will be disallowed. There are four categories: 100, 50, 150. First two categories are plain and easy. Whatever you donate, take 100%. Whatever you donate, take 50%. But third and fourth, if they come in the exam, then you stop, do everything else, all deductions, and wait for this one. Third and fourth category require a cake size, which will be shared between third and fourth. The cake size is 10% of ATI. ATI is the available GTI minus all deductions except ATGG. ATG. You'll get the 10% of ATI, and that cake first will be shared, first will be eaten by 3. Anything less will be eaten by 4. How will you compare first? You will compare whatever you donated with the cake size, whichever is less, and then you will do percentage. So your 50,000 was less into 100%. And now 50,000 cake is used, so only 10,000 cake is left. So that or 30,000, whichever is less, so 10,000 and 50% of that. Always compare first and then percentage. Perfect. Wow, guys, what a chapter it has been. Now we end this discussion, and now we are going to go and first do all the exam questions, guys, on this. Only then we will move to the material, ICI material questions. Alright, so I'm just going to put some exam question here. And I will show you how it is not as difficult as it looks, guys. See, there is no dedicated question on deduction. It's always a part like this. So there are two deductions here, guys. Over to you all. This is the first question of May 19 paper. Read the last, generally the last two lines are deductions. Read it. I'll be back in 2-3 minutes, and please answer which section, how much deduction will be available. Over to you all. I'll be back in 2-3 minutes and we'll continue. We'll do all the exam questions first. Perfect. Rinath, looking at your answers as well as discussing this question, guys. As you can see, in a 14-mark question, guys, are there deductions? Yes. Sometimes they are hidden, sometimes they are apparent. Let's discuss the apparent ones. Deposit in PPF. Can I take 2 lakh? You will show, how will you show this? Once you have your GTI, so this is your amount column, you will have your gross total income. And once you have a gross total income, you will write less deductions under chapter 6A, and then you will write first deduction under section 80C. You will write 2 lakh, but then you will write limited to 1,50,000 under section 80CCE. So you'll get a deduction of 1,50,000 for this cost. Yes. And medical insurance premium paid for health of his wife 19 and health of dependent son 12 through check. Guys, you are 59 years old. So you are not a senior citizen, neither is your wife, neither is your child. So your limit is only 25,000. So 19 plus 12 is actually 31. Yes. So you can take maximum under 80D. You can take maximum 25,000. Perfect. Absolutely right, Rinath. Good. Guys, checking if there's any other deduction which is hidden. Salary. No deduction under chapter 6A. Commercial building in Delhi. Shares, purchase, dividend. Yes, guys, here we go. He received dividend of 13 lakh. Interest from saving bank account deposit with IDI bank 15,000. Guys, this is a hidden deduction. Will you get 80 TTA? Yes, you are less than 60 years, so TTA belongs to you. And IDBI bank saving deposit, so you'll get maximum deduction of 10,000. So always remember, guys, TTA, TTB and 80GG will be hidden in some hole in the corner. Remove them and take it. Alright. Guys, looking at this next question. Again, guys, read this. And here, do you get any deduction here? Let's see from a deductions perspective. No, there is nothing like deduction in this. So we go to the third question. This is Mrs. Mithul. She is 63 years. Let's see her deductions, guys. Yes, she definitely has deductions. Guys, here, this one are deductions. Please read and please tell me how much can I take as deduction for Mrs. Mithul, section and amount. Alright, so let's discuss this, guys. She paid tuition fee of 40,000 for her granddaughter, which has been debited to the capital account. No problem, she can debit it to capital account, but from a deduction front, guys, will she get under 80C? Unfortunately, no, because it's a granddaughter. Only for daughters or sons you will get. So this one, unfortunately, you will not. But for a second, what if this was daughter? Then how much will you get? You will get 40,000 entirely, yes, because you can get up to 1,50,000. She availed a loan of 8 lakh from bank for higher education of her son. She repaid principal of 50,000 and interest of 26,000. Guys, education loan. This is not 80C. This is 80E. Interest of 26,000 can be taken, yes. But what about 50,000? Can I take it under 80C? No. Principal repayment and all, no. You get only of the fees that you actually pay. This higher education, whether it's in India, abroad, we don't know. So we are not going to go on 80C lines. Alright. Anything else? Let's check, guys, if there is any interest, dividend, rental income, salary. That's about it. Perfect. So this is the only deductions in this sum. Let's go to the next one and let's see on the next one if there is any deduction. Excellent question, guys, here. Yes, guys, this is a question on basically computation of income. There's a person called Jagdish, but indirectly, guys, somewhere there are hidden adjustments. Let's check. He owns a house property. For that, nothing much. He purchased a flat in Pune, which was given on monthly rent. He has taken a loan, guys, for this flat in Pune. He has taken a loan from Union Bank of India for purchase of the Pune flat amounting to 15 lakh. The interest on the loan was 84,000. Interest has not been paid, so it's only interest. Had he paid the principal, he would have got a deduction under 80C. I hope you understand that. Rest everything is okay, no deductions here. Now, guys, the next sum is here. Deductions in this case, please check it out and please tell me what will be the deductions for Mr. Ganesh. This is a paper of November 20. Here we go. 1, 2, 3 deductions. Read and tell me. Besides the other deductions which you will see, please tell the apparent deduction, section and amount. What is his age? Guys, he's 58 years old, FYI. Hello? Who na? Okay. Alright, guys, looking at this first one, insurance premium 39,000 paid on life insurance policy of son who is not dependent on him. Guys, first up, life insurance 80C. Is it allowed? Yes, it's allowed. And guys, only life insurance can also be paid for children and for wife, so or spouse. So 39,000, can I take a deduction under 80C? Yes, 80C 39,000. Next, Insurance premium of 48,000 on policy of dependent father. Now this we don't know which kind of insurance. If we assume life insurance, guys, will this be allowed? No, because for father it's not allowed, only spouse and children. But if we consider this as health insurance, will this be allowed? Yes. Assuming he is 58 years, so father is definitely older. So how much will be allowed? The entire 48,000. So guys, here is an assumption. Yes, you'll have to put an assumption that this is medical insurance. Tuition fee of 42,000 of 3 children for a school. So here guys, you can take only for 2 children, that is 80C, you can take only 28,000. So this is how it is. Let's see if there's any hidden adjustment. You know hidden adjustments, guys, for interest and for house rent. Oh, by the way, we forgot deduction of 10AA, which we will discuss in 5 minutes. We'll discuss 10AA. There is a 10AA deduction here. Yes, guys, here royalty on a book, very nice. We'll do that also. 80 QQB. 40,000 as interest on saving bank account. So will we get 80 TTA? Yes, you will get 80 TTA. But of how much maximum, guys? Only 10,000. What if this was FD? You would not get anything. Perfect. That's about it. So now let's do 80 QQB, guys. This one. First, tell me, guys. He received a royalty of 2,88,000. Will that go to his PGBP or IFOS? 2,88,000. Is there a condition on that? 15% should be got into India? No, guys. On income, the government puts no condition. Please bring on all the incomes. So 2,88,000 is PGBP income. The expenditure for earning this income was 40,000. So I'm minusing 40,000. So 2,48,000 will go in PGBP and will come into GTI. So this is your income front, guys. No restrictions on income. Now let's check the deduction under 80 QQB. Step 1. It should be maximum 15%. This is 18. 2,88,000 is 18%. So what is 15%? 2,40,000. Step number 2. How much of this is brought into India? The amount remitted to India is only 2,30,000. So which is less? 2,30,000. And step 3. How much deduction have you already taken? 40,000. That will not give you now again. So 40,000 if you minus, so that is 1,90,000. So this or 3 lakh, this is the lesser amount. This you will get a deduction under 80 QQA or sorry QQB is 1,90,000. I hope this is understood, guys. If you have not understood this, please do let me know. Flag it off so at least I can explain. So this is 80 QQB. Please remember, guys, there are no steps in the income. Income is government is very greedy. Whatever is your income, whether 18%, whether foreign, Indian, whatever is your income, you'll get. There is no problem with that. This 10A we'll discuss very soon, but not right now. I'm looking at the next question already, guys. Here is the next question. Here, guys, here are the deductions. Please read and let's solve these deductions. Mr. Mukesh, guys, he is born on 1st April 1960. For your year, he is definitely a senior citizen. So he is 60 years or more. Let's check the deductions in this case. Alright, guys, he paid health insurance premium of 38,000 by account pay check for self and wife. So this is the first category. 38,000 can he take? Looks like a senior citizen, can definitely take. He paid 1,500 in cash for health checkup. Guys, does he have a limit left? Yes, yes, a limit left. So I'm using 1,500 here for health checkup as well. So out of my health checkup coupon of 5,000, 1,500 has been used. How much is left? 3,500. And he paid 4,000 by check for preventive health checkup of his parents. Unfortunately, parents will not get 4,000, they will only get 3,500. He also paid medical insurance premium of 33,000 to ensure the health of his mother. So can I take it? Yes, 33,000 here. And incurred 25,000 on his father's medical insurance. So guys, all the total up, if you total up, it's going much more than 50,000, but you will limit this to 50,000 and you will limit this to 39,500. Not limit it, but you will total up to 39,500. So I hope you understood, guys, why it's 39,500. 1,500 of health checkup also in cash. Yes, it's allowed in cash. And here it is 50,000. Yes. Why? Because it's going much above 50,000. So you limit it to 50,000. All right. So that is a reduction here. I'm going to this section now and looking at the deductions here. Jan 21 for 14 marks. This is Krishna, 65 years old. Guys, I'll tell you where all there are deductions here. Guys, in this case, there is a deduction. In this case, there is a deduction. In this case, there is a deduction. So please check and then we will discuss the deductions in these three cases. Yes guys, let's discuss this one. First, you have debited in your PGBP. Guys, see the question in great detail, guys. You have a profit of 5 crore something something, and in your PGBP you've debited an amount paid to Gurudwara. Sorry, that's not in PGBP. So what do you have to do? You have to reverse it. So you will add back PGBP 20,000, and then finally will you get to 80G. And guys, which category is this? This is a Gurudwara. So here it's a fourth category, but because you paid in cash, it will not be allowed. So thankfully I did not have to calculate ATI because it's paid in cash. Thanks to the cash, it helps us in the exam. Interest of 1,67,000 for an e-vehicle which is for personal use. Guys, if this was not personal use, PGBP is okay. Even 1,67,000, yes, you know guys, golden rule. But because it was personal use and it was debited to PGBP, first I will add back 1,67,000. And then in a section called 80EEB, I can minus provided it's from a bank approved source. It's taken between 2019 and 23. Yes, so I can take 1,50,000 here under 80EEB. And here income of 4 lakh from royalty on patent. So first this 4 lakh will go under PGBP, yes, or IFOS, yes. No TDS was deducted, does not matter. So 4 lakh will go in PGBP or IFOS, no expenditures. So that will go to your GTI, and from GTI, guys, step 1 not applicable, step 2 not applicable because this is in India only, and step 3 maximum, there's no expenditure, so maximum 3 lakh. So 80 QQB, I will minus 3 lakhs. Let's see if there's any other hidden adjustments here. Yes. Lump sum premium of 30,000 was paid on 30th March 2020 for medical policy taken for self and spouse. The policy shall be effective for 5 years from 30th March to 29 March. Guys, this is section 80D Ideally you will take 30,000 and divide by 5 because it's for 5 years, but you know guys, it is 5 plus 1, so you'll divide it by 6. So this one is 5,000 rupee deduction. We had discussed this, that whenever it's not 1st of April, it's any other date other than 1st of April, then you will do that number of years plus 1. And 8,000 paid in cash for preventive health checkup or self and spouse. In cash, can you pay? Yes, but not 8,000. The maximum limit is 5,000. Again, that is a deduction under 80D. So these are two deductions, both under 80D only. Guys, this is another question. We have last 3 minutes, so we will discuss this and we will end the session. Everyone, eyes on the price. Read and please think what will be the deduction in this case. This guy, how old is he? He's not told us how old is he, guys. But he received interest of 10,500 on his FD and 7,500 on his saving account. So will he get a deduction? Yes, under 80TT. If he is assumed to be 60 or more, then TTB. Otherwise TTA. TTA is not for fixed deposit, so only 7,500 for saving account. Yes. He paid LIC premium of 15,000 for self, allowed. Yes. 10,000 for spouse, allowed. Yes. 25,000 for dependent mother. Sorry mother, that is not allowed, because for life insurance it has to be within those limits of 2010, 2015, and only for self, spouse and children. So assuming this is within the limits, 50,000 and 10,000, can I take 50,000? Yes. Can I take 10,000? Yes. It should not go more than 1,50,000. This is 80C. Perfect. So guys, that's my time for this session. When I come back from the session, we'll discuss 10AA and we will also do salaries in today's session. So that's the agenda. If you have any questions, keep them, and when we come back, we can also discuss them. Alright, I've also dropped the WhatsApp number for any doubts that you have. You can always, whoever's watching it recorded also, if you have any particular doubts, the best way is to send a voice note. I will hear it and I will reply back with another voice note. I hope that helps. Thank you so much. See you guys now in half an hour. Alrighty.